President Trump's tariffs are here, and investors really don't like them.
Remember when tariffs were going to end civilization as we know it? Jim Cramer literally said Black Monday 2.0. Goldman Sachs screamed 45% recession risk. The New York Times ran headlines like it was the apocalypse. Then something funny happened. The news cycle moved on. There was Ukraine, Hamas, Doge, ICE raids, Iran. But what actually happened to those economy-destroying tariffs while everyone was distracted? The answer might make you question everything that you've been told about, well, everything. April 2nd, 2025, Liberation Day. Tariffs announced.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
Within 48 hours, the S&P 500 lost $5 trillion. The Dow dropped 4,000 points. The volatility index spiked to levels not seen since COVID. Jim Cramer, live on CNBC.
The president doesn't try to reach out and reward these countries and companies that play by the rules in the 1987 scenario, the one where we went down 3 days and then down 22% on Monday, has the most cogency.
Goldman Sachs says the odds of a recession are more likely in the wake of tariffs. Economists have raised their 12-month recession probability from 35% to 45%.
JP Morgan upping its recession odds to 60% from 40% previously.
Every financial expert on TV was basically saying the same thing. Trump just broke America. But here's what they didn't tell you. The crash happened before the tariffs even took effect. I mean, think about that for a second. The market didn't crash because of tariffs. It crashed because everyone believed what the experts said about tariffs. Then, as fast as the panic started, it stopped. Not because tariffs were canceled, not because Trump backed down, but because people realized something the media forgot to mention. The sky wasn't actually falling. The Dow shot back up 1,200 points in days. S&P had its best May since 1990.
Trump 2.0 has been a source of endless punishment. U.S. stocks are proving to be resilient. The S&P 500 index marked its strongest May since 1990.
But here's the thing. That entire recovery, it was driven by just 7 companies. The Magnificent 7 tech stocks accounted for 57% of all gains. Apple, Microsoft, Google, Amazon, Tesla, Meta, and Nvidia. 7 companies carried the entire market recovery while everyone else was still arguing about tariffs. Same tariffs, same policies, same market, different story. So while everyone was distracted by the next crisis, here's how it's going. The GDP, up 3.8% per the Atlanta Fed. Inflation, 2.4%, basically where the Fed wants it. Jobs added 139,000 in May alone.
The newly released June jobs report hiring shattered expectations, easy for me to say. 147,000 jobs added just last month. Unemployment also ticked down to 4.1%.
And those economy-destroying tariffs, $23 billion in revenue generated last month. That's up 270% year over year. But here's the historical context nobody mentions. We now have the highest tariffs since 1909. 1909, that's before World War I, before the Great Depression, before everything. The average effective tariff rate is now 22.5%, higher than it's been in over a century. And yet, the economy didn't collapse. But wait, there's more the experts didn't tell you. While tariffs brought in $23 billion, they also cost the average household $3,800 this year. That's real money out of real pockets. China hit back with tariffs on $330 billion of our exports. Farmers, manufacturers, tech companies all got hit.
China hit back hard against US tariffs on Friday with countermeasures of its own. Beijing announced tariffs of 34% on all US goods and placed curbs on the export of some rare earth materials.
Global supply chains actually shifted. Companies moved production from China to Vietnam, Mexico, India, and Bangladesh. Entire industries restructured in months. The Organization for Economic Cooperation and Development, the OECD, cut our 2025 growth forecast to 1.6% because of trade disruptions. So it's not all sunshine and rainbows. But here's the thing. It's also not the apocalypse they promised. It's just complicated. like most real-world economics.
The White House taking a victory lap on Friday after President Trump announced he signed a new trade deal with China. The full details haven't been announced yet, but it's focused on lowering American tariffs on Chinese imports in exchange for concessions from China on shipments of rare earth minerals to the U.S.
Clearly, the White House is set to position this as a big victory this morning, given that all eyes have been focused on that July 9th date for trade deals to start to come to fruition. The White House now saying they've got a trade deal, and it's a big one with Vietnam, guys. Back over to you.
India and the United States likely to sign an interim trade deal within the next 2 days to avoid additional 26% tariffs from the 9th of July.
Here's what really happened while everyone was panicking. American companies didn't just sit there and take it. They adapted. Apple moved iPad production to Vietnam. Tesla expanded Mexico operations. Walmart shifted sourcing to India and Bangladesh. In 6 months, we saw supply chains shift that normally take years. The result? Trade with Vietnam up 40%. Mexico imports up 25%. India manufacturing partnerships doubled. China's share of U.S. imports dropped for the first time in decades. Mission accomplished? Maybe. But at what cost? That's the real question, and we'll see. Now here's where it gets interesting. Jerome Powell, the Fed chair, has kept rates steady for 4 straight meetings. Federal funds rate, 4.25% to 4.5%. Trump wants him to cut rates by 2 percentage points. Why? Because every 1% cut saves the government $300 billion a year in debt payments. We're spending over $1 trillion annually just on interest, more than defense spending. So do the math. 2% rate cut equals $600 billion saved annually. That's real money that could go to infrastructure, military, social programs, or tax cuts. But here's Powell's impossible dilemma. Cut now, that looks like he's helping Trump before an election. Don't cut, and you risk choking growth and making the debt crisis worse. And here's what the media won't tell you about central banking. It's not just economics. It is politics. It is perception. It's timing. Powell isn't just fighting inflation. He's fighting the appearance of bias. The Fed is supposed to be independent, but in reality, every decision gets judged through a political lens. Here's what smart money is watching. If tariffs keep filling the U.S. Treasury at $23 billion per month, watch Europe try the same playbook. Watch other countries follow suit. Because here's the dirty secret about global trade. Everyone talks about free trade until they need the revenue. France is already floating a digital sovereignty tax. Germany is considering carbon border adjustments. The UK is exploring strategic industry protection fees. Different names, same concept. Tariffs. The U.S. just proved that you can survive them without economic collapse. Now every finance minister in the world is taking notes. Within 12 months, we could see European tariffs on U.S. tech companies, Asian tariffs on American agriculture, everyone copying the national security exemption playbook. The era of free trade, it might be ending, not because of ideology, but because governments are broke and need revenue. Tariffs are the easiest tax to sell politically because they hit foreign companies, even though consumers ultimately pay the price. So where does this go? We've got 2 paths. Path 1, Powell cuts rates. Government saves $600 billion annually. Stocks and real estate boom. Inflation risk returns. Trump looks vindicated. Other countries copy the tariff playbook. Global trade war accelerates. Or path 2, Powell holds firm. Rates, they stay high. Growth slows, recession risk rises, government debt crisis worsens, political pressure on Fed intensifies. International trade tensions escalate anyway. Either way, the winner won't be whoever screams loudest on TV. It'll be whoever reads the actual data instead of the headlines, and whoever adapts fastest to the new reality. The age of free trade is ending. The age of strategic trade is beginning. Here's what the last 6 months taught us. The experts who predicted disaster, they moved on to the next crisis. The politician who screamed about economic collapse, they found new things to scream about. The media that promised recession, they're covering wars and raids now. But the tariffs, still here, still working, still generating $23 billion per month. Not perfect, not terrible, just working. Maybe, just maybe. The next time every expert agrees something will be a disaster, maybe wait and see what actually happens. Maybe ask, who benefits from this panic? Maybe remember, the loudest voices are rarely the smartest ones. And maybe, just maybe, The people making real money aren't the ones arguing on TV. They're the ones quietly adapting to whatever comes next. Because here's what I noticed while everyone was panicking about tariffs. Some people actually got richer during all the chaos. Not because they predicted the market moves. Not because they had insider information. Not because they were smarter than everyone else. There was something else, something nobody talks about, and it had nothing to do with economics, politics, or even luck. When I figured out what it was, everything clicked, and I covered it in detail right here. You'll see why some brilliant people stay broke their entire lives, why others with average intelligence build massive wealth, why the smartest person in the room is often the brokest. I'm revealing exactly what separates them in this video here. You'll never guess though what the real difference is. And once you see it, you can't unsee it. Don't miss it. Thanks for watching. I'll see you soon.